Okay, welcome to TradingLounge and the European Indices. On the 1st of November, we'll be looking at the DAX, the AEX, and the UK100, the FTSE. And just looking at the bigger picture here, we've got primary wave 3 here, and then the ABC correction back for primary wave 4 here, and then this trend starts in 2016, which is in line with the US banking sector and the S&P 500 starting in this day, and also other stocks out of this sector for the mining resources, BHP, Glencore, and so on, also started. There's a group of certain markets that started this trend in 2016, and they should all complete pretty much the same. So we're looking at primary wave 4 here, and we're looking for 5 waves up here for primary wave 5 here of a larger 5th wave here. So the 5 waves that we're looking here of intermediate degree is wave 1 and wave 2 here, and then 5 waves up of minor degree here for intermediate wave 3, and then wave 4 here, which I'd expect this trend channel to be breached at that point there. Once we've got that in play here, we should expect intermediate wave 4 to come back into the wave 4 of 1 lesser degree, or the 38.2% retracement level from wave 2 to wave 3 here, which is basically the same as once we get this top in through here, let's say just around there, the 38.2% retracement level is pretty close anyway. It comes back into around there, so that's the target area that we'll be looking for at this stage. In terms of the trading levels as well, the most common pattern is the classic trading levels pattern number 1, and then classic trading levels pattern number 2, and then the overshoot. In this case here, we've got the beginnings of a classic trading levels pattern, so I'll just draw it over here, which is the arrival, which is to here, the corrective pattern back here as the reaction, so the arrival, the reaction, and then the first high above the level, and then the corrective pattern will unfold this way here. On smaller degrees, we would look to take the top out here, then we could bring that down to here, and then we'd wait for support on here before we move up into this 5-wave structure here. But in this case, because it's such a large structure, of course, we'll be looking for the 5 waves finishing in wave C here as an A and a B and a C wave here, and then we'll start to build trades in this point here, which will be this point here. But I just wanted to point this common pattern out that's going to occur here. Now we're looking at, well, I think I'll just go to one more picture really, because I think this is pretty exciting. Once we've got this wave 5 in here, and the other thing here too, I don't know how long wave 4 is going to take. Wave 4s can be complicated, especially if wave 2 is simple of the same degree. So we've got an A and a B and a C here, which is really quite simple. So this one here could be quite complex and time consuming. So I don't know how long it's going to take until we can actually figure out if we've got, a double zigzag, a triangle pattern, an expanded flat. There's a variety of patterns that can occur in here. We need to nail that down before my gob about how long it's going to take here. But once this 5 waves here finishes, and it might pull up to the 15,000 here, but that's something that we can work out as we start seeing this structure build here. We'll be able to look at the ratios. But the as this wave 4 here comes back to the wave 4 of 1 lesser degree here, then this one here, once this gets in here of primary wave 5 here, then we can look at this one coming back into the wave 4 of 1 lesser degree here. And this is the part of the bear market that people have been waiting for. They've been guessing it all the way through here, but it's a long way to go yet. All there is. There's just a long way to go before it gets in. But this here is just part of, because it's part of it. This is this 5th wave. So it'll be big. It'll even be bigger than this, but just for the time being, just to give you that opening there. But our main short today really is looking from wave 4 to wave 5 here. So let's just move into we want to be counting 5 waves in this structure here. So just moving into the daily chart now, we're looking at this from this wave 4 being wave 1 and 2. And 3 and 4, and going up for 5 here. So there are 5 waves in this structure. So from wave 4 here to wave 5 here, we're also looking at 5 waves here as well. So we can start to move into the intraday section here. Not that this is going to help us much here, so I'll have to go to the hourly chart. But in a nutshell, we're looking for wave 1 and 2 and 3 and 4 and 5 coming into play here. The other point while we're here too, worth pointing out, is that we're in what we've got 13,000 here, right? And then we've got group 1 here, because it's always important to understand at what point that that I would be wrong or you would be wrong, or what you need that sort of plan. Not only plan B, you need plan C as well. For me is that if we're looking for 5 waves up here to finish, then I would expect that we're not going to find support on 13,300. So in regards to the trading levels, this would be a major trading level here, and then we'd have minor trading levels 1, 2, and 3, then 5, then 8. The Fibonacci numbers as a price ratio. I wouldn't expect us to find support on this level here, okay? But if we do, then we need to basically trade what we see, and we need to go long from that point. So coming up here, we'll look for the arrival, the reaction, the first high above the level. And if we do get a corrective pattern here, then we will be looking to go long again on top of group 1, because getting support here on this group here will take us to the next number, which is 5 here. So we need to be looking at that. We expect it to come, not to find support and to move down from that point, but if support is found, then we need to trade what we see, and we need to go long from that point. So it is a matter of being right or wrong, but also it's not a matter of being right or wrong. It's a matter of taking the trade signals, when they present themselves, and you look at that signal in an isolated point of view, because there's a difference from being an analyst, and there's a difference from being a trader. For being an analyst and a trader are two totally different things, and you can get confused if you haven't segregated them correctly. So as an analyst, I could say that we're looking for 5 waves up here, and then we expect it to come down, and that's fine. But obviously, I'm not going to be right all the time. So if I know that, so then I can take over of like, well, if I am wrong, where am I going to be wrong, and what am I going to do about it? Well, this is what we do about it here. So let's just go in and look at the hourly chart, then the tick chart. So in looking for 5 waves to the upside here, we're looking at wave 1 and 2 here, and we're also looking to, if I can just bring this in a little bit. So from this wave 4 here, we look to go long here on this green one here, and also this green one here to build in, and then take profit at the 13,000. And then we just waited. We try to find a way back in, because that's what we do with the trading levels, So now we can take this one here and copy this, and we can put that here, because this is where we need to get out now at 13,300. And yes, look, it could trade above it, and it can do this and it can do that, but our job is to trade to the next largest number of the same degree of what we're trading, and we need to get out. So we looked at going long. Let's just go over this, because hindsight can be valuable. This was our first high here, then this one, then this one, then this one, and then this one here. And of course, you could have got lower in here and all the rest of it. But this is where we were looking at being long, and then looking to counting our 5 waves up. Had a nice strong third wave here. Thanks to the Googles and Amazons and so on. And then we're looking for, we understood this is wave 4 last time we spoke, so we're looking for a trigger here. But now we've basically got to get out here, okay? This is where we get out, and we can take a closer look. Now, the other point here too is from this wave 4 here to this wave 5 here, we're looking for 5 waves again between this space here. So going into the tick chart here and picking up that green wave 4 here, this is where we had our entry here above wave B here. And this is the way I was sort of counting it here. So wave 4 coming into here. So I'm just looking at this as wave 1 here, ABC for wave 2, nice strong third wave here. So we're looking for a fourth wave, and as you know, a fourth wave will pull back 38.2%. So on the ratio, that's back into group 2 here. So 1, 2, and 3, 5, and 8, but with group 2 here, I mean, we use the Fibonacci numbers here as a price ratio, but always put in the 72 and the 65 here as well, because when we're working with 13,300, that's the minor level there. What we need to do is we need to look at group 1 above, which is 1, 2, and 3, and then group 2 below, because this is the space between here. I can't draw on the other side of I can't draw on this side of the price. So group 2 and group 1 here of the 13,300 here. This is the space. This is the space where the corrective pattern will play out for this number here. But at this stage here, we've got wave 1, wave 2, wave 3. The 38.2% retracement level will be in group 2 there, and even closer to the 72 there. Yep, right on. So that's where the 72 is. So we can just remove that, and as I mentioned, I can't draw on this side of the price here. This pattern here so far is an ABC correction. The trouble with wave 4s is that they can get rather complicated. So, but anyway, that was the exit point. And I haven't, to be honest, I haven't pulled all this apart here. I'll need to go into the 10 tick chart to get that, but we should still end up into wave 5 here. So this is minor group 1 here, and as I mentioned, if we get support on top of this one here, then we can look at 13,500. But at the same time as well, from this 13,300 here, which is a minor group 1, then we've got subgroup 1, so we've got 10, 20, and 30 here. So if we get support on top of this one here, even though we're looking for a top here, of course, if we get a tested support on top of this number here, then we need to go along from that point with a classic trading levels pattern. I'm going to go over to the AEX now, Netherlands here, and the same thing again from wave 4 here. We're looking for 1 and 2 and 3 and 4 last time we spoke. So, and then we're looking for wave 5 to move to the upside. So we're pretty much there as well for this one here as well. The next level here would be the 5 here if support is found on 3 here. But you can pretty much start closing this trade out here as well. Now, and this is the same count as the FTSE, of course, as the DAX, of course, as well. But the FTSE has got a different count, so let's just go into that. It's in a bit of a world of its own. Now, I could be mistaken here. So, as I mentioned before, we had a very clear wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 up here for wave 3. So this market is lagging here. Okay, so it does appear that this move down through here is corrective, and then we're looking at 5 waves moving up here, and this is not the best looking 5 waves I've ever seen as well. So it's sort of like, is it, isn't it, those sorts of things. But it does appear that the well, not so much now as with this, but look, it's been a bit of a rough diamond. We were looking at taking wave B high up here, unless we got another high above the level. So I'll just explain that here. So we've got the arrival, the reaction, first high above the level here, which is our reference point, this one here, and then we were looking for an A and a B and a C wave coming back, and then we're looking for support on this here. So when we get to this point here, we're also looking for a classic trading levels pattern too. So the arrival, the reaction, the first high above the level, so I'm just going to draw that in there, then the A, the B, and the C wave here, and then going from that point. So realistically, we'd be looking for this top here, that top here. We could bring it down to the B wave, but that would be the B wave just here. And then we can bring it down to this one here. So realistically, we can bring it down to here, but we can also bring it down further again too, on top of this one here, just to be safe. So I've got a bit of a, I've got this as a corrective pattern for here. I've got this as an A wave here, an A and a B and a C for here, but because we made this extra little low in here, it could put this as 1 and 2 and 3 and 4 and 5 here, then an ABC here. So it can create this as a bearish pattern here now. So we need to be careful. But if it was going to be a bearish pattern, then we need to put on our trader's hat and basically look to short this low over here, because we would have originally had this low sitting, this trigger sitting over here, then into here, because this dropped through 7,500 here, and then it's retested the 7.5 here, but it actually hasn't got support on this level yet. It's trying to, and it's doing its best, and I was expecting it to and should do, but it's not there yet. So we can still put this under here as a trigger here, and that's what we should do. And you know, the breakout is important, but the retest is more important, because the retest is actually looking for support, and wherever that support is, that's where your stop has got to go. Well, under the support. You don't put stops on whole numbers. Yeah, so in this case here, we're just about there, but you know, you have to ask yourself, you know, is that support on 7,500 here? No. Is that support on 7,500 here? No. Is that support on? No. So we're still waiting for that, okay? But we can, the safe triggers are, this is the safe trigger. Then I always put it on wave B here for the next trigger, but that's only just to say that that we're looking for this high here, this, not the A, the B and the C, and then this one here, this is the one we're looking at here, but this one here is really quite high here, so we should be able to find a lower one in here, but I'll just leave that there for now, and I'll leave that at that. But what I am saying here is that this market is still lagging, because we still need to make 5 waves up here, so 1 and 2 and 3 and 4 and 5, so maybe it's going to move really quickly at this point. I don't know, but as far as I can see with this structure here, it's just not finished. But at the same time, our plan B in this case is to short this low here. And also too, I must say, in shorting this low here as well, we also need to, you know, do the same thing again as well. So from the 7.5 here, if it breaks like it's here, broken through here, and it's retest. You could take this one here too if you wanted to here, but there's risk in that one. But if this fails down through here again, it is going to come back and check that. It's going to come, well, probably that trend line there, and then move back down again. So, but it shouldn't breach that one there now, because that's basically that move up there. That is at least 60% back down. So breaching of this here would put this into a lot of problems here at this point. But I just want to play it safe, and we'll use this one here. And there will be a bounce off it when it comes to this point here. So you can just monitor that there as well. But we'll look at that on Friday. Alrighty, cheers.